and welcome to the FI Newscast, where we bring you relevant news in the food and beverage industry. Today is Friday, March 24th, 2023. We have a great show for you today. Our special guest is 𝗟𝗏𝗁𝗂, partner at 𝗏𝗏𝗁𝗂𝗏. Going to have a great chat, but first we're going to cover some of the top stories from this week that we think are worth a second look. The Federal Reserve Board is caught between the financial crosshairs as it recently announced economic projections from its March meetings. The board raised rates to a range between 4.75% to 5%, the ninth time in a row that rates have gone up, and projected one more push later this year. The lingering banking fallout and fears over inflation have made it difficult to predict any specific long-term outlooks. Fed Chair Jerome Powell said that their decision for further rate increases depends on future data trends and their insights on the effects of credit tightening. In earnings news, developments with two food companies. Darden Restaurants, owner of such places as the Olive Garden and Longhorn Steakhouse, reported better than expected third quarter results. Same restaurant sales increased by nearly 12% for that period. President and CEO Rick Cardenas pointed out their ability to keep prices low amidst inflation as a reason for the solid performance. Management also raised its sales growth guidance to about 7% for the year. Meanwhile, cereal giant General Mills sales went up 13% in their third quarter, with North American retail and pet segments experiencing double-digit growth. Their strength in numbers is what's causing Chairman and CEO Jeff Harmening to raise organic net sales expectations to about 10% while improving margins. In the world of non-dairy milks, oat milk is certainly having a moment. Market Research Future reports that the oat milk market will grow to $7.8 billion by 2030 at a compound annual growth rate of 7.2%. The report states that driving factors include the increase of consumers who identify as vegans and shoppers who are becoming more health conscious and want to turn towards plant-based dairy products. It's good news for companies like Oatly, who recently announced their fourth quarter fiscal year 2022 earnings. They reported a nearly 5% increase in revenues for the period compared with last year. Big concerns in a practice that's supposed to be good for the environment. Bloomberg reports of a potential cooking oil shortage due to the demand of the ingredient to create biofuels. Due to a global push away from fossil fuels, various cooking oils have become the hot ticket as an alternative source of energy, but it's driving demand extremely high. War, severe weather, and other factors are limiting production of soybean, vegetable, and sunflower oils. Some of the need could spill over into the palm oil market, a product that has been criticized for its deforestation and forced labor practices. And finally, the world of 3D printed food is expanding. Mechanical engineers at Columbia University have just published an article in the NPJ Food Science Journal about their journey to 3D print a cheesecake. Normally, 3D printers use a small number of ingredients to create dishes, but this group of scientists experimented with 7 layers of food inks to create this cake, including peanut butter, Nutella, and strawberry jam. After multiple attempts, the team was able to produce a solid result. The goal is to explore and determine the many areas that the science of 3D food printing needs to grow so that it can transition from the lab into the real world. Yeah, I think I'll be brave enough to try that cake. And those are your top stories. We turn now to our next segment featuring our special guest for today. He is a partner at 𝗏𝗏𝗁𝗂𝗏, a grocery analytics and data insights firm dedicated to helping conventional grocery retailers define and defend their in-store and online businesses. He manages the research and retailer benchmarking programs, and he has a deep knowledge of grocery sales in both physical and digital channels. He is 𝗟𝗏𝗁𝗂𝗏. David, welcome to the show. Thanks for joining us.
Thanks for having me.
All right, first I want to ask you, you are a grocery expert, right? What is your go-to product when you hit the supermarket? What aisle are you going into? What product are you going to hit first?
Ooh, that's a good question. Well, it's probably produce, but if it's an indulgent item, it's probably the candy aisle.
Okay, and what's the go-to candy? What's the favorite candy?
Well, now that you ask, I keep a sundry of mints and favorites right here, but my go-to favorite is the Atomic Fireball. So when I'm in the store, if I see a package, I'll buy it there. But most of the times I buy it online for many of the same reasons people shop online for certain personal favorites and have them shipped to their house.
All right, very, very wise, very strategic, spoken like a true grocery analytics insight specialist. David, thanks again for being with us. We're going to get right into it. So you are an expert when it comes to looking at e-grocery sales. Tell us, who are the winners and who are the losers in the online grocery sales journey these days in the competition here?
As far as specific companies, Walmart is probably the shining star at the moment. Obviously, the economic conditions favor Walmart for a variety of considerations. They've developed a very seamless shopping experience, whether you're in store or online, delivery, pickup, or shipped to home. They're not necessarily the best in class. We could point to some others, but they are doing well enough and are positioned really at the place where most consumers are, those who are especially looking to stretch the buck, to better satisfy those essential grocery needs.
All right, thanks for those comments. Moving into some of your own excellent research, I want to turn to some stats that you have found within your firm. Previous performance of e-grocery sales overall increasing by 1.5% this past February compared with the same period last year, 8.8 billion in sales. There has obviously been some strong growth in online grocery shopping. How is the economy going to impact that? How is inflation going to impact that? We've got the banking fallout, all of these factors that are creating uncertain outlooks in many companies, even with the Fed board, as I've reported earlier. David, what are you seeing from where you stand when it comes to online grocery sales?
Well, I think first and foremost, we see continued strong and sustained interest and demand from U.S. households. Obviously, AOV, or average order values, continue to increase, although right now they're running at probably half the rate of inflation. So we can see some compression or pressures that the consumers or households are having relative to buying what they want. And we can see that manifested in terms of where households are shopping to stretch that dollar, as well as how they're buying groceries when they are buying them, whether it's in store or online. And when it comes to order frequency, we are seeing that slow, steady kind of reset from pandemic highs. We're now just under 2.5 orders per month for households that are actively using online as a way to get those grocery needs. At the same time, we have the fiscal issue of inflation that is pressuring the purchasing power of households. So that is causing consumers to avoid paying more than necessary, and that's triggering certain flights to value. And obviously, the banking situation combined with inflation and the interest rates simply means we're probably returning to more of a rational market relative to the players in this space. We need to keep in mind that most of the digital disruptors that have really been the catalyst for a lot of these changes over the last 5 or so years were driven by private equity and venture capital. That money has become much more expensive. That's good for the traditional brick and mortar, who emphasizes profit over sales as opposed to blitzkrieging and going for sales over profit. So I think there's a lot of dynamics going on. The key for the retailers out there is to still better understand their customer and find ways to continue to improve the online experience, as well as the overall shopping experience, whether they're online or in store.
What about the term I like to think of, the hybrid shopper? We've been noticing, at the Food Institute, statistics that have highlighted a big increase in hybrid shoppers, consumers that are shopping both online and in store over the past few years. Obviously, you've seen there are increases in online only shopping, but it wasn't as big, and in-store shopping obviously has decreased. What are your thoughts on that? Do you think that the trend of this hybrid shopping will decrease as more people may want to come over to online only? Do you think that trend will continue? What's your insights about that, about this hybrid model?
Well, I think over time, and the view of time horizon here would be something kind of outside this topic, but over time, whether it's 3 years or 5 years, We would anticipate a continued increase in that hybrid shopper today, or at least according to our results from the February 2023 shopper wave would indicate that, around 40 to 45% of households are buying some degree of groceries online during the month. That's an impressive number. But, above, someone spending any amount of dollars above zero is interesting. What we would really look at is what's the magnitude of that shift. And so if we look at households that are spending over half of their share of grocery spend online, that's under a quarter of the households. And if we look at households that are spending over 75% of their share of wallet online, which is pretty impressive, it's about 15%. So we would anticipate as households become more familiar and accustomed to this way of shopping, as retailers continue to invest in improving the seamless shopping nature of shopping online versus in store, that the level of acceptability will continue to grow, and that growth will yield higher share of wallet. So I think the question is just how fast and when do we hit that? That's the kind of the $60,000 question at this point.
Right. Wanted to go into some of your excellent stats a little more. Brick Meets Click had released 5-year outlook, compound annual growth rate of online grocery shopping, nearly 12% through 2027. Can you tell us what factors are driving that big increase?
Well, I mean, inflation is a large component of that. As we are in unprecedented times, our expectation is that inflation will be around a lot longer than most of us would really care for it to be. It really comes to now kind of organic growth of new users coming online. Keep in mind right now, from a channel perspective at least, a lot of that growth is flowing into the mass discount segment, primarily because of the financial concerns and circumstances we have today. So, as we look out going forward, obviously, the growth is going to be unevenly distributed across the channels. And one of the key variables, at least in the near term, is the price position is going to dictate to a large degree, who the winners and the losers are.
Right. Thanks for that, David. Well, we're going to take a quick break, but when we come back, we're going to get right back into it with David Bishop of Brick Meets Click. Stay right here. All right, we are back with David Bishop, partner of Brick Meets Click. Thanks so much for joining us. We are going to get back into it. David, I want to talk about, in a more broader sense, retailers and the consumer. How is it that retailers can meet the needs of the online customer while still maintaining a healthy profit margin?
Well, that's a huge question right now. And, to unpack that, you really kind of have to look at which retailers we're talking about. I mean, we have a lot of retailers that are fast followers and looking at the market leader, someone like Walmart. Now, Walmart's strategy is driven by its market position, its capabilities, and the customers it serves. So they can offset this level of investment in ways that many regional grocers or local grocers cannot. And one of the most noteworthy is retail media networks, and the ability for Walmart to monetize that opportunity versus someone with 20 stores or even 100 stores is, magnitude's different. we would be of the opinion for regional grocers who don't have the same opportunities as those large national retailers. So this could include the likes of, Kroger, Albertsons, Ahold, Walmart, Target, etc., who aren't able to create new ancillary revenue streams from new opportunities like retail media network, that they're going to have to look at this. And when we understand where they are positioned in the marketplace, which tends to be 15% or higher above Walmart on a basket of goods, and understand who their customers are and why they shop with them, which is more for the quality of the products and service as opposed to the cost of the products, that they really need to interrogate this issue in a way and arrive at understanding what they need to do with their pricing online. Really, it's something that the regional retailers have to not only interrogate, but embrace and accept that it's okay to break from trying to follow the market-leading low-cost provider over the cliff. These are some of the things that we believe that the regional and local grocers really need to address in the near term, so the next 1 to 3 years, as we kind of reset and understand what's the long-term view and path to improve profitability. Because ultimately, we would like to see online be comparable on a profitability basis as in store. We got a ways to go for that, but there are means for doing that. Now it's just a question of whether we have the conviction and the will to move forward.
What about emerging tech and the role of AI specifically within e-grocery? We're seeing that in general in the food world. It's pretty much taking the food world by storm. We see how companies are using AI to manipulate and manage data internally. We're seeing the use of things like robotics in restaurants, in both front of the house and back of the house. What are you seeing, if at all, emerging tech and AI in that online grocery space? What are your insights there?
Well, I think it's really exciting, but at the same time, kind of tempt with or kind of held with a degree of kind of cautious optimism, I guess. And that is, when we look at AI, where it probably has very near-term impact is the search algorithms, whether it's for recommending or suggesting other products to add to the basket based on the customer's profile. And again, there are means and methods which we use today that are probably a little more reliant on the customer to kind of fill out their profile. So I think in one way we could see a dramatic improvement in terms of how the search results come back and offer more relevant, personalized offers to the individual customers. Relative to pricing, I would see probably more immediate upside opportunity for the utilization of it around dynamic pricing for fees. I would be a little more cautious on the use of it within pricing at this point until we get through some of the other things, although pricing would be a natural area of opportunity. It's just a little more fraught with issues from a kind of a competitive and a customer perspective. So I think those would just be a few observations I have relative to AI's potential impact within the grocery retail space.
All right, well said. Thank you so much for the insights. David Bishop, partner of 𝗟𝗏𝘁. Thanks again so much for joining us.
Thank you.
We're going to take a look at what's ahead in the food industry in the coming days. On March 28th, Walgreens and McCormick & Co. released their latest earnings reports. On March 29th, the Food Institute holds an event, the 2023 Restaurant Roundtable. Should be an informative discussion. On March 30th, the Bureau of Labor Statistics releases the latest GDP numbers. And finally, on March 31st, the University of Michigan releases new numbers on the Index of Consumer Sentiment. And that is our show. Thanks so much for joining us. Special thanks to David Bishop of 𝗟𝗏𝘁. Please tune in next week, same time, same place. Our next guest will be nutritionist Kelly Springer, CEO of Kelly's Choice. She'll be here to tell us all about the latest in the nutrition world, health and wellness world. Should be a great show. Until then, have a great weekend and take care.